Hi, everybody. Thank you so much for joining me. Happy New Year to everybody. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen right now for a special message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, 2022 was a pretty terrible year for the stock market. The S&P 500 was down by 19% for the year. The Nasdaq, which is very tech heavy, did even worse. But there is a pretty long list of stocks that actually gained in 2022. In fact, roughly 10% of the Nasdaq and New York Stock Exchange actually finished the year higher. So let me just start with my four favorite of the stocks that actually gained in 2022 that could still be worth buying and still have great days ahead. Number one, as you see on your screen, is T-Mobile. That was up 21% in 2022, so it outperformed the market by 40 percentage points. Pretty strong performance. And there's a few reasons I like it. And just kind of the quick version is they have better 5G coverage than both of their major competitors, AT&T and Verizon. Cash flow is set to increase significantly due to lower capital expenditures in 2023. 13 to 14 billion brings T-Mobile into the same realm as AT&T and Verizon. And it has much lower debt. It has about $70 billion in debt compared to about $130 billion for both AT&T and Verizon. So T-Mobile is a stock that I think could surprise investors once again in 2023. Number two is Berkshire Hathaway. Not a big gainer, but up 3% for the year, which is 22 percentage points better than the S&P 500. And I've said before, Berkshire is a stock that's pretty much always worth buying. The portfolio is set up to do well no matter what the economy is doing. When you think of some of the businesses that Berkshire owns, like Geico, people pay their auto insurance no matter what the economy is doing. Their utility business, people need electricity and those kind of services no matter what the economy is doing. And Berkshire loves to keep a lot of cash on hand, which puts it in a great position to capitalize. And if you think there's going to be a big recession, if the economy is going to get worse than expected in 2023, Berkshire is the kind of stock that is very well positioned to take advantage of. They still have about $100 billion in cash right now. Number three is Chevron, the best performing stock on this list. They gained 53% in 2022, and it's not totally surprising. Oil prices did really, really well, so not surprising that Chevron did as well. But I love how management's using the extra money they're making. They're paying down debt, which is a big advantage in the capital-intensive energy space. They're buying back shares. They plan to get more aggressive with that. To put it in perspective, they spent about $60 billion on buybacks over the past 20 years combined, and now they're planning to spend about $15 billion annually. So getting more aggressive with that, and they've increased their dividend for 35 consecutive years. So they've done a great job of returning capital to shareholders and creating value, and they want to continue to do that no matter what happens in the energy space. They're investing very heavily in renewable energy, which is pretty impressive. They're actually one of the leading U.S. producers of renewable fuels now, since they spent $3 billion to buy Renewable Energy Group. They're investing $1 billion of their capital expenditures this year to increase capacity in renewable fuels. And they're really positioning themselves well for the gradual transition away from fossil fuels that is inevitably going to happen in the world, which could take decades to play out, but they're doing a great job of positioning themselves. And last but certainly not least, I own this one in my own portfolio. Teva Pharmaceuticals gained 14% in 2022. They're the generic drug maker, if you're not too familiar with the company. So handily beating the market, and for good reasons. They've reduced their debt significantly, but everyone already knew that. Their debt's gone down from about $34 billion to about $19 billion since 2017. The second bullet point is the real story of why it outperformed in 2022. It's because they've been getting sued left and right by different states about their opioids. And now it looks like that's all settled. They're expected to get nationwide resolution on that. It's going to cost them several $1 billion over a period of years. But it'll be really nice to have that in the rearview mirror. And the stock is trading for less than 4 times. That's not a typo. Less than 4 times 2023 earnings estimates. So Teva is a stock that has had a really terrible, say, 5 years, but it looks like 2023 could be a time when it could turn around. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.